Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the second day of February 2015, and this is the daily report for gold and silver. One thing we can say with the start of February is that we did not lose any of the volatility that we have seen really throughout the year, really throughout the end of last year. We've had extreme volatility in the markets, big rally in the stock market, crude kind of popping back up. To the precious metals markets, we do have gold, silver, and platinum trading lower, palladium trading higher on the day. First to gold, $12.7437, puts it off roughly $9 on the day. We've seen a low of $12.6650 and a high of $12.8190. Silver trying to pop back positive, if at all possible at this point on today's trading day, off about a nickel on the day, just above 17 at 17.20. It has had a low of 16.97. It has dipped below 17, high of 17.29. And as you can see, we're currently trading, as I said, off roughly a nickel on the day. We'll talk about silver towards the end of the show. So traders, I do want to start today's show by looking at a much longer term chart than we typically start the show with. We're looking at the spot market of gold, weekly chart. Reason for bringing that up today is that when we take a look at the most recent activity, the fact that we do have a down market today, and that would make the start of this weekly candle, that's this candle right in here, a red candle, it really brings into light the prior candle, which was last week's candle. And the reason I'm bringing that up is that this candle is very, very much like what is simply called a hangman, that is part of the umbrella group of candles in which you have a hammer, inverted hammer, shooting star, and then a hangman. A hangman, in terms of straight definition, has to occur after the market's been in a defined uptrend, meets that criteria. You need to have a very small bodied candle in which the open and close color is not important in this particular candle. It could be green as well as red, but where the open and close are very, very tight, and when you compare the real body, meaning the space between the open and close right here, when you compare the real body to the tail should be anywhere between 2 and 3 times the size that of the real body. So we're meeting that criteria. To actually take this as a candlestick call, you would need to get confirmation. Confirming candle would be this week's candle. You would need to see it make first a lower high. We've achieved that on 1 day's trading, but it would also necessitate a lower low. You'd need a pretty solid red candle, such as you get a red candle here, but you need to see a solid red candle to actually take that as a call on a weekly basis. But I thought that it's absolutely worth noting because we have some real pressure in the market at this point, and my question is, will we see further downside? To really answer that, let's take a look at some of the other markets that we know affect both gold and silver. So traders, 1 day does not make a week, and 1 week does not make a month. Certainly 1 day does not make a month, and we're looking at a monthly chart, and we can see, we'll have to see how it turns out over the month, but we can see that for the first time in a long time, we've actually got some green in there. We're trading just under $50 per ounce. Traders, if you recall, my belief was that we had a pretty critical area right in here. In terms of the range, you're looking on the low side, $48, on the high side, about $52, and this range is derived from 2 Fibonacci retracements, and I said that's a pretty critical area that it holds. If it doesn't hold that area, we could see a testing of these lows back in the 30s, whether it's a high 30s, mid 30s, or low 30s, but we could absolutely see a test. We are now seeing some real support come into the market. We've seen quite a rally in the oil market as we've seen it move back up off of the mid 40s and into the high 40s as of right now. Equities markets, we're looking at a half-a-day chart. This is the E-mini 500, so it's the S&P 500. We've identified a couple of areas that we believe should have some sort of supportive action on a technical basis, and 1985 has been one of those most critical areas. Now, as you can see, we are at 2018. On this half-day candle, you can see that for the first part of the session, the market was actually trading lower on the day. And this after having a dramatic up day on Thursday, a dramatic down day on Friday, follow through lower on Monday's open, today's open, only to pretty much rebound and have a rally. I believe it was about 180 points in the Dow Jones Industrial Average. So quite a sizable rally in the equities markets. So traders, with that in mind, what can we make out of the current condition of gold, and where do we think gold might trade through this week? Of course, we're flat currently with no open positions. I'm trying to get a real sense for a longer term direction to see if some sort of a trend is developing, whether that trend is a corrective wave off of this rally that we've seen. My belief is that we had a major rally as a wave 1, wave 2, and wave 3. Whether or not we are still found in wave 3 itself, or whether we've actually completed it, that could be the case. We've met the criteria. It is not the shortest of any of the impulse waves, just shy of 138% extension. So whether this is part and parcel of a larger, this of course is a sub count, but a larger wave 3 to move back up, or if we've seen the top and we'll see it correct. What we're going to do over the next couple of shows is to chart different retracement areas where we think the market could go to if it remains under pressure, and also talk about the various signs that we want to look for that would show us some support in the market. Longer term, I am bullish on the market. Interim term, I'm not convinced that we've seen the last of our selling. I thought we might have a pretty solid move in the marketplace as we saw this tremendous rally on Friday, and that tremendous rally came after a tremendous sell-off on Thursday. But if you recall from when we were looking at that stock chart, we had really the same type of action, dramatic down day followed by a dramatic up day. And that's why I started the show with the statement that the one thing that we can say is that we continue to see some pretty dynamic volatility within the market. For the time being, we're remaining flat in our positions. We have no open positions in gold or silver. We will look to see how the market wants to react. There's a lot of fundamental news out there that's currently being digested. We'll go ahead and digest that with you, our subscribers, and act accordingly. Lastly, I want to take a quick look at silver. Silver's been an interesting animal, to say the least. Most importantly was this incredible fall that we had. This came right after Thanksgiving. This $14 tick down here. If we put in a basic fib retracement from 1417 up to 1859 and look at a 38% retracement, which is roughly at $17 per ounce, we see that there could be, on a technical basis, a reason to find some support. This area here is our critical area, a break below this particular point, and we're going to be looking at our next support level, 50%. That's at 1650, and I believe this is about 1585, and that is our 61% retracement. And that, of course, is a retracement from this entire move that we witnessed from the beginning of December up until, I'll call it middle of January. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.